Be Wealthy and Smart, episode 860.
Step into a world of wealth and financial freedom without budgets, boredom, or bosses on Be Wealthy and Smart. And now, here's your host, Linda P. Jones.
Welcome to Be Wealthy and Smart. I'm Linda P. Jones, America's Wealth Mentor, empowering women and men worldwide to financial freedom. On today's show, we're going to talk about 4 real estate trends for spring. Because I noticed in the Be Wealthy and Smart VIP Experience group, we had a lot of questions about what's going on with real estate. I had a new posting that I made about the number of homes in forbearance, which was hard to find because I've been looking for a chart showing the number of homes in forbearance and showing where we were according to 2008 as compared to today and where we are as compared to a year ago. So I was finally able to find such a chart and show that the forbearance rates are high, but they are improving. They have improved from 6% down to 5%. So things are moving in the right direction. But we still have a lot of homes off of the market, and that's causing this craziness of multiple offers. Things like 122 offers coming in on a home and homes selling for record amounts over asking price in ways that people have never seen before because the inventory is so limited. Now that won't continue forever, and I do think that these prices, as I've said for the last year, are because of the forbearance. But there will come a day when those homes come out of forbearance and there will be more supply and demand, and we also may see interest rates rise, which also will be difficult for housing. Now, I'm not predicting any kind of a housing crash per se, but I do think that we are going to get to a point where prices are going to be more reasonable, we are going to have more inventory, but I don't think it's just yet. So this article comes to us from Yahoo Finance. It was written by Nancy Sarnoff. And these 4 trends to watch for spring, I thought were pretty good timing to continue this dialogue about real estate and what's going on with real estate. So she says there's 4 trends that will shape the U.S. housing market this spring. Number 1, mortgage rates will keep rising from historic lows. Few could have predicted that the real estate market would set records due to a pandemic. Well, that and mortgage rates under 3%. But those too good to be true rates are quickly fading. They've been rising for weeks, and analysts say even higher rates are on the horizon, so borrowers should try to score low rates before they're gone. I just want to pause there and say, I do think we have a combination of higher rates coming, but I also don't think that they just are going to take off in one direction. I think we're probably going to see rates spike up and then come back down. So I don't think that just because we saw very low rates that we'll never see that again. She goes on to say the popular 30-year fixed-rate mortgage is expected to average 3.1% this spring, up from 2.9% during the first quarter, according to a forecast from Fannie Mae, a government-sponsored mortgage giant that buys home loans and bundles them into investments. Forecasters have been predicting an uptick in mortgage rates as the economy improves and more Americans are vaccinated against COVID-19. Moving forward, the general uptrend in mortgage rates is expected to continue as economic growth draws investors into stocks and out of bonds, says Danielle Hale, chief economist for Realtor.com. Home shoppers should use a mortgage calculator to get a clear picture of what they can afford as rates fluctuate. The higher rates go, the more your buying power shrinks. Number 2, frustrations will ease for home shoppers. Would-be homebuyers who have felt shut out of the market amid a lack of houses for sale should have a bit more to choose from in the second quarter. Springtime generally kicks off the busy selling season, and homeowners now may be more inclined to list their properties for sale as more of the population is vaccinated. owners will see less risk of infected people showing up to tour their houses. I want to pause there and just say also, spring is when most people put their homes on the market. It's when the kids are finished with school and parents can move and make some adjustments. So I do think that we will see more inventory come on the market this spring. I agree with that. She goes on to say home sales slipped in February after 2 positive months, but economist Lawrence Yun with the National Association of Realtors says historically low inventory was to blame. The market is still outperforming pre-pandemic levels, Yun said in the group's latest housing report. Some 1.03 million homes were on the market in the U.S. at the end of February, down nearly 30% from a year ago, according to the realtors. Rising mortgage rates aren't likely to put much of a damper on home buying, according to the Fannie Mae forecast. U.S. home sales are still expected to eclipse last year's performance by 6.2%. Number 3, COVID-19 will continue to drive housing decisions. Americans aren't done upgrading their living situations. Over the past year, buyers seeking larger homes with bigger outdoor spaces flooded the market. Because we've stayed at home so much in the last 12 months, housing has had the highest intrinsic value in our lifetimes, said Ted C. Jones, chief economist of Houston-based Stewart Title Guarantee Company. Prices are soaring amid the low inventory, and million-dollar homes are selling at a rapid clip. The median existing home sale price spiked to $313,000 last month, 15.8% higher than a year earlier, the National Association of Realtors says. Yet, as mortgage rates rise, buyers find it harder to make the numbers work on these pricey homes. You'll see a shift, says Jones. We'll go back to where renting will be more favorable than owning a home. Number 4, refinancing will still be an option for millions. The uptick in mortgage rates has reduced the number of potential refinance candidates, but an estimated 11.1 million homeowners still have an opportunity to refi, according to mortgage technology and data firm Black Knight. If you're one of the many who qualify, a refi could save you an average of $277 per month, though some lucky owners have the potential to reduce their monthly payments by as much as $745 a month. That's a lot of savings that could go toward paying off debt or diversifying your investment portfolio, maybe even into farmland. Well, that's an interesting idea, and an idea that certain billionaires have started investing in. The article goes on to say Black Knight defines refinance candidates as 30-year mortgage holders with at least 20% equity in their homes, a credit score of 720 or better, and the ability to land attractive mortgage rates at least 3/4 of a percentage point lower than what they're currently paying. End of article. As always, I will put a link to the article in the show notes. So I think the main thing that I want to get across is that this has been a better time to sell than to buy, and I still believe that to be true. I think you have to be really careful not to get into these bidding wars and overpay for a house, because housing will get back to supply and demand pricing, and we will have a lot more inventory. There's no doubt about it. It's just a matter of when. When will we have more inventory come onto the market? When will the forbearance program end? When it ends, then we will see more supply out there, and that will lead to prices being more reasonable. In the meantime, one strategy that I like is, if you need to buy a house, of course, have a 10-year time horizon that I always recommend, but also you could buy something that is more of a fixer. That way you're not getting into so much competition for the house, because not everybody wants to buy a fixer. In fact, most people don't want to buy a fixer. They want to buy it already fixed up. And if you're smart and you imitate some of the finishes that new construction is using in your tile, in your colors, in your cabinets, especially for your kitchen and bathrooms, if you imitate what the new construction builders are doing and you're smart about your choices of finishes in your house when you remodel it, then you're adding real equity, real value into your house. And even if prices drop somewhat, you've created more value in your home, so you have a cushion there if prices do drop. But you still don't want to overpay for a fixer as well. You want to try to not get into any bidding wars. So I hope that helps you get through this house hunting season. It's been very, very crazy out there, and hopefully we'll see a little bit more inventory this spring, and that will loosen up a bit. But let me just review for you the 4 trends to watch. Number 1 was mortgage rates will keep rising from historic lows. I think yes and no on that. It may not be a straight shot up. We may see some weakness, but we'll find out. Number 2, frustrations will ease for home shoppers. Yes, I agree, we'll have more inventory coming on in the spring. Number 3, COVID-19 will continue to drive housing decisions. I think that's true too. People are looking for being in the right place at the right time with the right property, with the right home and the right space for the family. I think that a lot of people are rethinking that. And number 4, refinancing will still be an option for millions. And I agree with that, although we have seen refinances fall off a cliff recently. If we do get a downtick in interest rates, those people that need and want to refinance will be right back applying to reduce their interest rate and their payments. That's all for today. Until next time, live the good life and be wealthy and smart.
Thank you for listening to Be Wealthy and Smart with Linda P. Jones. Share the wealth and tell your family and friends about the show. Check out our website, blog, and social media for more riches at www.bewealthyandsmart.com.